Do you know what the stock chart looks like for a fantastic company? Well, pretty much the opposite of Credit Suisse. Despite the fact that they were down almost 14% on their last trading session, you cannot even see that drop when looking back at the last 14 years or so, which makes it no surprise that they are the next domino to fall in this global banking crisis. Because the problems with Credit Suisse did not start today, they did not start yesterday, they've been going on for a very long time. The writing has been on the wall. This right here is the chart of the Federal Reserve's swap lines with other central banks. And in late October 2022, there was a spike in other central banks drawing liquidity from the Fed. It turned out that that was the Swiss National Bank making a draw of $6.3 billion the week after it had already drawn $3 billion. Now, I've talked about this before and how the Federal Reserve has set up facilities so that it can get dollars out to the rest of the world should the need arise, so that they don't spark a run on the dollar if the rest of the world suddenly starts to default and have banks start to collapse because they can't get their hand on dollars, because most dollars overseas are just dollar IOUs. And at the end of February of this year, the Swiss bank, Credit Suisse, was found to be seriously breaching its obligations. These were supervisory obligations regarding risk management and appropriate organizational structures. And then two things happened all at once. Number one, depositors started another run on the bank at Credit Suisse as they started to withdraw their deposits. And number two, investors started to pull out and sell shares of Credit Suisse, leading to a substantial drop in the stock price. Part of the reason why the shares were dropping was because Saudi Arabia said they're not going to inject any more capital. And why would they? Because it seems at this point like, hey, look, we could dump some more money in, but it might not work. And so if it doesn't work, we're going to lose it all. Why would we keep on doing that? But investors are not the only ones pulling out here. You can see that depositors are getting spooked as well. If we take a look at this chart, you can see that over the last decade or so, deposits have been steadily increasing. But towards the end of 2022, there was a massive, monstrous decline in deposits as people just started pulling out their cash. Keep in mind, you do always have to look at the values on each axis, as this looks like an 80% drop, but in fact is about a 37% drop from about 400 billion at the top to 233 billion right now. And people were wondering whether Credit Suisse was going to completely fail, whether it was going to collapse and cause contagion. But at this point, the Swiss central bank has stepped in and has said, hey, here is a lifeline. They said that the bank meets the capital requirements and that the bank could access liquidity if it needed. But it doesn't look like that was enough to stop the rest of the world from at least fearing and maybe betting on a failure here. At least one counterparty, BNP, has stopped accepting swap reassignments involving Credit Suisse. Not only that, but their default swaps are 18 times UBS and 9 times Deutsche Bank. Not only that, but their credit default swap curve is inverted. Normally, if you are going to hedge against or bet on the collapse of something, there will be a higher chance that that thing will collapse if you give it more time. But in this case, investors are betting on a higher chance that Credit Suisse collapses or fails right now than further into the future. Just like an inverted yield curve on bonds, this is not a good sign in terms of the perception of the economic health of the company. But like I said earlier, this is nothing new. People have been warning about this and talking about this for quite some time, and people have known about the issues at this bank for a very long time. Nouriel Roubini was recently warning that contagion from the US bank failures could spread globally. In an interview, he stated that there is at least one financial institution in Europe, and he was hinting that this was Credit Suisse, that has problems recapitalizing, historically undercapitalized. And if something were to happen with this institution, it would be much more systemically important. Rubini also warned that a banking crisis can easily morph into a debt crisis, a sovereign debt crisis. So how did this happen and where is it going next? Banks are all, at all times, insolvent. They're always bankrupt. And it isn't until people realize, number one, or care that the bank is bankrupt, that something starts to happen about it. In the case of Silicon Valley Bank, it has been bankrupt for a long time, as all banks always are, because the bank business model is to take your dollar, which you can technically, they say you can get it back at any point. They then take your dollar and loan it out to somebody else in the form of a loan that bank cannot get back at any time. This is called fractional reserve banking, but it is legalized fraud because the bank is telling every single one of its depositors a lie. They're saying you can get your money back whenever you want, but if they actually try to, they cannot meet the obligation. Fraud is something that is outlawed in every industry but banking. And it is the reason why banks are always bankrupt. And all you need is for people to either realize or care that the bank is bankrupt for something to then happen about it, like a bank run causing the bank failure. And this is the way all banks operate. And so if there is any catalyst that makes people realize my money's not actually there, there'll be a rush to go get your money out so that you're the first one in line, because if you're too far back in line, there will be nothing left. And so once this starts to happen, it doesn't matter what the trigger is. It doesn't matter what the catalyst is. And it doesn't matter whether that trigger has anything to do with any of the other banks in line. If you know that, hey, because of some issue with technology, because of some issue with tech and raising funds, this bank collapsed because everyone went to go get their money and it wasn't there. And that same thing could happen to my bank if everyone goes to get their money and it's not there. Well, then I'm gonna go get my money. It has nothing to do with whether or not my bank was exposed to tech or not, like the first bank. Bank runs can spread. There can be a contagion even if the catalyst does not apply to the other banks, which means that Credit Suisse is the next domino to fall, but it is not the last domino to fall. Credit Suisse is what is considered a globally systemically important bank. This is a G-SIB. It is one of the worst capitalized and has one of the worst balance sheets of the G-SIBs, but it is still considered a G-SIB. And when people wake up and realize, which most people are, you saw the chart of the depositors pulling their money out of Credit Suisse. When people wake up and realize even the biggest, largest, most systemically important banks can be at risk of failure, there's going to be problems. And like I said earlier, this entire problem rests on the foundation of the way banks operate. Fractional reserve banking is the problem here. It is the process of fraud that makes all banks insolvent at all times. It used to be people would put their gold coins in the bank and get a receipt that said they could come get that gold whenever they wanted, and they'd have to pay for storage. That was 100% reserve banking. And then those banks started to make loans in excess of the gold that they held, called fractional reserve banking. And so instead of just issuing 10 claims on 10 pieces of gold, they would issue 11 claims on 10 pieces of gold. At some point, people realize this, and there's a run on the bank, and that bank collapses, and people don't do business with those people anymore. And from then on, they're very concerned to make sure that their money is actually there. But this process of fraud was legalized, nationalized, and scaled up to central banking. Now, the days of gold reserves in storage are long gone, but the way our banking system operates is the exact same thing. So we've got this Frankenstein banking system, monetary system, that has rules and regulations and a foundation left over from when there was actually a physical commodity held in reserves, even though we have fiat that is printed into existence. And in all likelihood, this means that the next step, what is going to happen here as a result of these bank failures that are happening like every day now, is a global nationalization of banks. We are already seeing new regulations, new oversights, politicians launching new investigations into asking the question, how did this happen? Well, it happened because that's what banking is. It is fraud. And when people realize that, the fraud collapses. But the nations don't want to allow that failure to happen, so they're going to bail it out. But the only way you can bail that out and at the same time tell people we're fixing the solution, fixing the problem with a solution, is to nationalize the banks. They cannot be private businesses that are looking to profit if their whole entire business model relies on fraud. So whether we get a technical nationalization through extra regulations and extra oversight and laws against certain profit opportunities and laws against certain investing opportunities, or whether we get an outright nationalization where they take deposit banking and we just say, hey, that is going to all be done through, let's say, the Federal Reserve. So everybody's deposits will be held at the Federal Reserve and it'll be done regardless of what is being done. You don't have to go loan out those dollars for profit because the Fed can just print money and we basically just inch our way into a CBDC with nobody knowing. We are most likely going to see the result of this, whether it's 6 months, 1 year, 5 years, be a nationalization of banking across the world. Coincidentally, this also means that the largest deleveraging in history has just begun and it cannot be stopped. But that's a video for next time. If you'd like to know how to make large profits with a small account, or if you would like to know how to invest in gold or silver to get your money out of the financial system, or if you'd just like to understand the best way to allocate your portfolio so you don't have to be worried about this volatile market, check out Heresy Financial University, linked in the description below. As always, really appreciate you guys. Thanks so much for watching. Have a great day.